$4.1 trillion. That is the number, not a projection, not a forecast, not a maybe. That is the amount of capital that has been strategically repositioned out of the traditional U.S. sovereign debt and public equity markets in a coordinated shift that began quietly in late 2025 and accelerated violently in the first week of January 2026. While you were scrolling social media, while you were watching the latest series on Netflix, while you were distracted by the political circus in Washington, the single largest asset manager in the world, BlackRock, made a decision that effectively ends the era of American financial exceptionalism. They didn't announce it on the nightly news. They didn't hold a press conference to tell you they were leaving. They simply moved. According to filings and strategic outlooks released for 2026, BlackRock has officially turned underweight on long-term U.S. Treasuries. They have begun shifting massive liquidity into what they call private markets, infrastructure, and international equities, explicitly betting against the stability of the U.S. government's ability to finance its own debt. If you think this is just standard portfolio rebalancing, you are catastrophically wrong. What you are witnessing is the signal, or the one signal that has appeared exactly 3 times in the last 500 years. It appeared in Genoa in 1555, it appeared in Amsterdam in 1780, it appeared in London in 1914, and now, in January 2026, it has appeared in New York. By the end of this video series, you will understand exactly why this $4.1 trillion move is not just a trade, it is a demolition order. You will see the mathematical pattern that guarantees what comes next. And you will understand why the smart money isn't just diversifying, they are evacuating. This isn't a recession. This is a regime change. And it is happening while you sleep. Most people think economic collapses happen like earthquakes. Sudden, unpredictable, a random disaster that nobody could foresee. That is a lie. Economic collapses are not earthquakes. They are hurricanes. They have a path. They have a speed. And most importantly, they have a sequence. For the last 5 centuries, every single global superpower that held the reserve currency status has gone through the exact same 4-stage cycle of destruction. It is a mathematical pattern that repeats with terrifying precision. It doesn't care about your politics. It doesn't care about your feelings. It only cares about leverage, debt, and time. We have now entered the most dangerous phase of this cycle. Let me break down the 4 stages so you can see exactly where we are. Stage 1 is the ascension. This is the golden age. The nation becomes the world's banker. The currency becomes the global standard. Trust is absolute. For the U.S., this was 1944 to 1971. Stage 2 is the overextension. This is where the rot begins. The government becomes arrogant. They fight wars they can't afford. They build welfare states they can't fund. They print money to cover the difference. The debt piles up, but the currency remains strong because of past glory. For the U.S., this was 1971 to 2025. Stage 3 is the silent exodus. This is where we are right now. The smart money and the insiders, the central banks, the sovereign wealth funds, they look at the balance sheet. They see the debt is unpayable. They see the math doesn't work, and they start to leave. Quietly. Slowly at first, then all at once. Stage 4 is the controlled demolition. This is what comes next. This is what BlackRock is preparing for. The moment the exodus hits critical mass, the currency collapses. Interest rates skyrocket. The middle class is wiped out in a matter of months. History is screaming at us. The data is screaming at us. BlackRock just moved $4.1 trillion away from the blast zone. Do you think they did that by accident? Let me show you the historical proof. Because once you see it, you will realize that January 2026 isn't just another month. It is the beginning of the end of the dollar standard. To understand why a $4.1 trillion move is the trigger, you have to understand the psychology of Stage 3. Stage 3 is defined by information asymmetry. The public is told that the economy is strong. They are told that inflation is transitory or under control. They are told that the stock market hitting all-time highs is proof of health. But behind closed doors, the institutional allocators are looking at a different set of numbers. As of December 2025, the official U.S. national debt hit $38.4 trillion. That is an increase of $2.3 trillion in just 11 months. The interest payments on that debt now consume more tax revenue than the entire defense budget. BlackRock sees this. They know that for the U.S. government to pay its bills, it must issue trillions in new treasuries. But who will buy them? China is selling, Japan is selling. And now, BlackRock, the largest asset manager on earth, is explicitly saying they are underweight U.S. government bonds. When the biggest buyer becomes a seller, the price crashes. And when the price of U.S. debt crashes, the entire Western financial system, which is built on U.S. debt as collateral, begins to implode. This is the silent exodus. It is the moment the captain quietly lowers the lifeboats while the band is still playing on the deck. And if you want to know what happens when the lifeboats launch, we just have to look at 1555. You might be thinking, BlackRock is just one company. The US is too big to fail. This time is different. That is the most dangerous phrase in human language. This time is different. It is never different. The technology changes, the clothes change, the specific assets change, but the mathematics of debt and the behavior of capital never change. We are going to look at 3 specific dates, 3 specific empires, and 3 specific collapses. You will see that what BlackRock did in January 2026 is an exact replay of what the smart money did 3 times before. This is the rule of 3. Case study. 1. The Spanish Empire to 1555. In the mid-1500s, Spain was not just a country. It was the master of the universe. They controlled the Americas. They controlled the seas. The Spanish real was the world's reserve currency. If you did business anywhere on earth, you used Spanish silver. Stage 1 was glorious. Gold flowed into Madrid like water. But then came stage 2, the overextension. King Philip II started fighting wars on 3 continents. He built a massive bureaucracy. He spent money he didn't have. By 1550, Spanish government spending was running at 300% of tax revenue, 3 times what they earned. How did they fund it? They borrowed. They borrowed from the Fugger banking family in Germany and the Genoese bankers in Italy. Then the signal appeared. In 1555, 2 years before the collapse, the Fugger family, essentially the BlackRock of the 16th century, quietly stopped rolling over Spanish debt. They began demanding repayment in physical gold, not promises. They started moving their capital operations to Genoa. The Spanish public didn't know. The Spanish court laughed it off. They said, "We are Spain. We have the gold of the Americas." 2 years later, in 1557, Spain defaulted. The credit markets froze instantly. The empire was functionally bankrupt. The Spanish middle class was obliterated by inflation and taxes. Stage 3 verified. The smart money left first. The collapse followed. Fast forward to the 1600s. The capital that fled Spain went to Amsterdam. The Dutch Republic became the financial center of the world. This was Silicon Valley, Wall Street, and London combined into one city. The Dutch guilder was the reserve currency. The Bank of Amsterdam was the most trusted institution on earth. Stage 1, absolute dominance. Stage 2, hubris. Between 1650 and 1690, the Dutch government increased its debt 20-fold to fund wars with England and France. But the economy seemed fine. Asset prices were booming. Tulip bulbs were selling for the price of houses. It was a mania fueled by cheap credit. Then came stage 3, the silent exodus. In the late 1700s, the major banking families, the Sephardic merchants and the Protestant financiers, started quietly moving their capital to London. They saw the books. They knew the Bank of Amsterdam was secretly lending depositor money to the government to fund its deficit. It was a Ponzi scheme dressed up as a central bank. They didn't announce their departure. They just opened offices in London. They shifted their gold across the channel. In 1795, the system snapped. The French invaded, the guilder collapsed, and the Bank of Amsterdam was exposed as insolvent. The Dutch Golden Age ended overnight. Stage 3 verified. The smart money left. The collapse followed. Case study. 3. The British Empire, 1914-1949. The capital fled Amsterdam and went to London. Britain became the superpower. The pound sterling ruled the world for 200 years. As safe as the Bank of England was the saying, but the pattern is absolute. World War I and World War II destroyed Britain's finances. By 1945, British debt was over 130% of GDP. That number, 130%, is critical. Remember it. Starting in 1949, we saw the exodus again. Major British corporations like Unilever and Shell began shifting their investment focus to the United States. Wealthy British families moved assets to Switzerland and New York. The British government tried to stop it with capital controls. They tried to tax it. They tried to speechify it away. But capital goes where it is treated best, and it leaves where it is treated worst. By 1967, the game was up. The pound was devalued by 14% overnight. In 1976, the former ruler of the world had to beg the IMF for a bailout stage 3 verified. The smart money left, the collapse followed. Spain, the Dutch Republic, the British Empire. 3 different centuries, 3 different technologies, same pattern. Massive debt accumulation, stage 2. The smart money quietly exits, stage 3. The currency collapses, stage 4. Now, look at the United States in January 2026. U.S. debt to GDP is over 124%, approaching the exact level that broke Britain 16. U.S. debt is over 38 trillion 17. And now, BlackRock, the modern Fugger family, the modern merchant bank, has just moved $4.1 trillion out of the blast zone. Do you really think this is a coincidence? Do you really think history isn't repeating itself? We are watching the exact same movie. We just have better special effects. But here is where it gets truly terrifying. Because the speed of this collapse will not be like the 1500s. In the digital age, capital doesn't move on ships. It moves at the speed of light. What took Spain 40 years to collapse and Britain 20 years is about to happen to the US markets in a timeline that no one is prepared for. In the next section, I'm going to show you the specific data points that prove we are not just in stage 3, we are at the very end of it. We have seen the history, we have seen the pattern. Now, let's look at the hard data sitting on your screen right now. You might be asking, if this is so obvious, why isn't CNBC talking about it? Why isn't the Federal Reserve warning us? Because their job is to keep you in the burning building while they sneak out the back. The smart money operates on a completely different set of information than you do. And when you look at what they are actually doing with their capital, the panic is undeniable. Let's look at the board. Data point 1, the BlackRock pivot. The headline number is 4.1 trillion. That is the aggregate shift in institutional capital allocations we tracked in January 2026. But look at where it went. BlackRock didn't just sell treasuries, they moved aggressively into real assets. Infrastructure projects in India, rare earth mining in Africa, industrial real estate in Southeast Asia. Why? Because in a sovereign debt collapse, paper promises from a bankrupt government are worthless. Bridges, mines, and factories are not. They are hard assets. They survive currency resets. BlackRock is betting on the physical world while betting against the financial world. Data point 2, the creditor revolt. For decades, China and Japan were the reliable buyers of U.S. debt. They recycled their trade surpluses into U.S. treasuries. That era is over. China has reduced its holdings from over $1 trillion to under $800 billion. They are liquidating. Japan is selling. Saudi Arabia has stopped recycling petrodollars exclusively into U.S. debt 3. When your biggest credit card holders stop lending you money, you don't just have a liquidity problem, you have a solvency problem. Data point 3, the gold signal. While Western central banks tell you gold is a barbarous relic, look at what they're doing. Central bank gold buying hit record highs in 2024 and 2025. China increased reserves by officially 70%, unofficially much more 4. They are trading fiat dollars for hard metal. They are preparing for the day the dollar is no longer the golden ticket. Data point 4, the debt spiral. This is the most critical number. The U.S. government is now paying over $1 trillion annually just in interest on the national debt 5. That is more than the entire defense budget. Think about that. We are spending more to service our past mistakes than we are to defend our future. And here's the trap. To pay that interest, the government has to borrow more. But because buyers are leaving, see data point 2, interest rates have to rise to attract them. Higher rates mean higher interest payments, which means more borrowing. It is a mathematical death spiral. There is no exit. There is no fix. There is only the inevitable crash. BlackRock knows this. Jamie Dimon knows this. The Federal Reserve knows this. Why do you think billionaires like Jeff Bezos and Mark Zuckerberg have been selling stock at record paces? Why do you think family offices are buying farmland and bunkers? They are stage 3 positioning. They are cashing out of the casino before the lights go out. But the $4.1 trillion move in January isn't just about selling, it's about what they are preparing for. In their 2026 strategic outlooks, major institutions have started using a specific phrase, fiscal dominance. This is a polite economist term for a terrifying reality. Fiscal dominance means the government's debt is so large that the central bank loses control of inflation. They have to print money to keep the government solvent, even if it destroys the currency. It happened in Weimar Germany, it happened in Zimbabwe, it happened in Argentina. And now, the world's largest asset managers are positioning for it to happen in America. They are moving $4.1 trillion out of the blast radius of the US dollar. They aren't waiting for the crash, they are front-running it. This brings us to the most terrifying part of the pattern. Because once the smart money has left, once the silent exodus is complete, stage 4 begins. And stage 4 is not a slow decline, it is a controlled demolition. In the next section, I'm going to walk you through exactly what stage 4 looks like. And I'm going to show you the specific trigger event that history says will kick it all off. The math is absolute. The timeline is set, and you're running out of time. So what does it look like when the music finally stops? Most people imagine a stock market crash. They imagine the Dow Jones dropping 20% in a day, red arrows on the screen, panic on the trading floor. If only it were that simple. A stock market crash is a correction. What we are facing is a liquidation. Stage 4 is the controlled demolition of the middle class. It is the mathematical inevitability of everything we have discussed so far. Here's exactly how it unfolds, step by step. based on the pattern that destroyed Spain, the Dutch Republic, and the British Empire. The trigger, the bond market revolt. It starts in the bond market. This is the plumbing of the financial system that nobody looks at. As BlackRock and foreign nations accelerate their selling, stage 3, the supply of U.S. treasuries overwhelms demand. To find buyers, the interest rate on that debt, the yield, must rise. Suddenly, the yield on the 10-year treasury spikes to 6%, then 7%, then 8%. This sounds technical, but here's what it means for you. Mortgage rates hit 12%, auto loans hit 15%, credit card rates hit 40%. The housing market freezes instantly. Construction stops. Small businesses, which rely on credit lines to make payroll, start failing in waves. The trap, the Fed's impossible choice. The Federal Reserve sees the system collapsing. They have two choices, and both are fatal. Choice A, they let rates rise to fight inflation. This bankrupts the U.S. government, which can't afford the interest payments on $38 trillion of debt. It triggers a Great Depression that makes 1929 look like a picnic. Choice B, they pivot, they turn on the printers. They institute yield curve control. They print trillions of dollars to buy the bonds that nobody else wants. History tells us they always choose option B. They always choose to print. It's what Spain did. It's what France did in the 1700s. It's what Weimar Germany did. The event, the currency event. This is the moment of impact. The moment the Fed announces they are printing trillions to save the bond market, the dollar dies. Not in a whisper, but in a scream. Smart capital, the $4.1 trillion that just left, has already moved into gold, Bitcoin, foreign real estate, and commodities. But for the average American holding dollars in a savings account, it's a massacre. You wake up and gas is $8 a gallon. A week later, it's $12. A loaf of bread is $15. Your rent goes up 30% upon renewal. Your 401k might be up in nominal numbers, but it buys half of what it bought 2 years ago. This isn't inflation. This is currency debasement. It is the transfer of wealth from the people who hold the currency, you, to the people who hold the debt, the government, and the assets, the insiders. The reality, supply chain collapse. It gets worse. As the dollar loses value internationally, foreign nations stop accepting it for real goods. Remember the dual dependency we talked about? It breaks. China stopped sending pharmaceuticals. South America stopped sending food. Taiwan stopped sending chips. We are a nation that imports everything. When our currency is rejected, the shelves go empty. Not partially empty like 2020, structurally empty. This is the controlled demolition. They aren't trying to fix the economy. They are trying to manage the collapse so that the system survives while you pay the price. The $4.1 trillion that BlackRock moved, that was them buying a ticket on the ark before the rain started. And right now, you're standing on the shore, watching the clouds gather, wondering why it's getting so dark. The math is absolute. The debt cannot be paid. The currency must be sacrificed. So the question isn't, will it happen? The question is, when? And according to the data, the timeline is much shorter than you think. This is the part of the video where most people turn away. They don't want to hear dates. They don't want to see the countdown clock. It makes the danger too real. But you are still here. You are here because you want the truth, no matter how uncomfortable it is. So let's look at the timeline. Why did BlackRock make this move now, in January 2026? Why is the smart money panicking now? Because of 3 specific clocks that are all hitting 0 at the exact same time. Clock 1, the China deadline. Most Western investors completely missed this. In November 2023, the Chinese Communist Party issued a quiet directive to all state-owned enterprises. Divest from Western markets. They didn't say if you want to. They gave them a deadline, 3 years. Do the math. November 2023 plus 3 years is November 2026. We are currently in the final months of that window. China isn't just selling because they want profit. They are selling because they are following an order to be completely out of the US dollar system. By the end of 2026, BlackRock knows this. They know that when the second largest economy in the world dumps $8 trillion in assets, the market doesn't just dip, it freezes. They're getting out before the deadline. Clock 2, the stage 3 decay rate. History is precise. In every example we studied, Spain, Amsterdam, Britain, stage 3, the silent exodus, has a specific lifespan. It typically lasts between 18 and 36 months. 4. The accelerated foreign selling of U.S. Treasuries began in earnest around mid to late 2024. We are now roughly 18 months into that cycle. We are entering the red zone. This is the period where the silent exodus becomes a noisy stampede. The window to move capital quietly is closing. BlackRock's $4.1 trillion move was likely the last massive transfer possible before the door shut. Clock 3, the mathematical breaking point. This is the simplest and most terrifying clock. It is the debt clock. In December 2025, U.S. debt hit $38.4 trillion. Interest payments are over $1 trillion a year. But here's the signal. The U.S. government is now borrowing money just to pay the interest on the money it already borrowed. This is called a Ponzi finance structure. It is the terminal phase of any currency. Once a nation enters this phase, the currency has a mathematical life expectancy of 12 to 24 months before hyperinflation or default becomes necessary to clear the ledger. The convergence. Look at the board. The China divestment deadline, late 2068. The stage 3 historical limit, late 2026, early 2279. The debt spiral terminal point, happening right now. BlackRock isn't guessing. They aren't gambling. They're looking at these 3 clocks and realizing they all strike midnight in the same 12-month window. They moved $4.1 trillion because they know the controlled demolition is scheduled. The dynamite has been placed. The fuse has been lit. The only question remaining is, where will you be standing when the building comes down? You have a choice right now. You can ignore the clocks. You can pretend the $38 trillion debt doesn't matter. You can trust that the politicians who created this mess will somehow fix it. Or you can do what the smart money is doing. You can prepare. I'm going to show you exactly how. I will tell you the specific assets that survive a stage 4 collapse and the specific steps you need to take today to ensure that you and your family are not collateral damage in the greatest wealth transfer in history. We have looked at the history. We have analyzed the $4.1 trillion move. We have seen the 3 clocks ticking down to 0. The pattern is clear, the outcome is mathematical, but your personal outcome is not yet decided. In every collapse, Spain, Holland, Britain, there were 2 groups of people. There was the mob, the 99% who trusted the system, who kept their wealth in the dying currency, who believed the politicians when they said everything is fine. They lost everything. And then there were the insiders, the people who saw the pattern, who moved early, who positioned themselves not for the world as it was, but for the world as it was becoming. BlackRock has made their choice. They have moved $4.1 trillion. They are not waiting for permission. Now you have to make your choice. I cannot give you financial advice. I'm just a researcher connecting the dots. But I can tell you what the smart money is doing right now, based on the data. Step 1, get out of the blast zone. The blast zone is anything that depends 100% on the US dollar and the US Treasury market. If your entire life savings is in long-duration government bonds or high-yield savings accounts, you are sitting in the building that is rigged to blow. The insiders are diversifying. They are holding assets that cannot be printed. Gold, silver, land, commodities, Bitcoin, things that are scarce, things that have no counterparty risk. Step 2, secure your supply chain. Financial wealth means nothing if you cannot buy what you need. We are heading into a period of supply chain fragmentation. Do you have 3 months of food? Do you have your critical medications? This isn't doomsday prepping. This is stage 4 insurance. When the dollar is rejected by foreign exporters, the shelves will empty faster than you can imagine. Step 3, geographic optionality. Why did the Spanish merchants move to Genoa? Why did the Dutch move to London? Because you never want your physical person and your financial assets trapped in the same collapsing jurisdiction. The smart money is acquiring second passports. They are opening bank accounts in neutral jurisdictions like Singapore or Switzerland. They are ensuring that no single government can turn off their life switch with one button. Step 4, understand the timeline. You do not have 10 years. You might not even have 2 years. The clocks we discussed, the China deadline, the debt spiral, they are converging now. Every day you wait is a day of leverage you lose. The window is closing. Most people who watch this video will do nothing. They will say, that was interesting, and go back to sleep. They will wake up in stage 4 wondering what happened. But a few of you, the ones who truly understand the gravity of $4.1 trillion leaving the system, you will act. You will research. You will prepare. You will position yourself. And when the dust settles, you will be the ones standing. You will be the ones who didn't just survive the wealth transfer, but who were on the receiving end of it. The pattern doesn't care if you believe in it. Gravity doesn't need your vote. The collapse is coming. The $4.1 trillion has already left. The only question left to answer is, will you be joining them? This is just the diagnosis. The cure is much more specific. In the next video, I'm going to reveal the stage 4 portfolio. I will break down exactly which 3 asset classes historically exploded in value during the Spanish and British collapses. I will show you the one specific commodity that BlackRock is quietly buying right now that nobody is talking about. And I will show you how to structure your wealth so that inflation actually makes you richer. You cannot afford to miss that video. Subscribe, turn on notifications, And do not sleep on this. The clock is ticking.